A multi-step income statement provides excellent information to a financial statement reader. When you first look at this statement, it can look intimidating, but let's break it down into its basic structure. Now that we have sales revenue, okay, with the merchandising company, we also have cost of goods sold. As discussed earlier, sales less cost of goods sold is gross profit. The calculation of gross profit allows us to calculate a gross profit percentage, gross profit divided by sales, and compare that to prior years in our own company or to other companies in the same industry. From this, we subtract operating expenses, and operations refers to business that goes on from year to year. Everything listed below the line, okay, income from operations, may or may not happen, this other revenue and expense. Also, it is not related to the primary activities of the business. So the structure is gross profit, income from operations, and then net income. Okay, so let's take a look at gross profit for CVS and Walgreens and then review the format once again. I opened Yahoo Finance and got the income statements for CVS and Walgreens. I have a screenshot here for revenue, cost of sales, and gross profit for both companies, and you can see why it's so important that we have standardized financial statements. Then I copied the numbers into Excel and calculated a gross profit percentage, and gross profit percentage is gross profit divided by sales. So here's my spreadsheet. You can see that, well, the nice thing about a gross profit percentage as opposed to a raw number is that it is comparable and easier to interpret and compare. CVS's gross profit percentage has decreased from 2015 to 2018 from 17.3% to 15.9%. Walgreens' gross profit percentage has also decreased from 26% to 23.4%, but it is still way ahead of CVS's. Why do you think these margins are decreasing? I think that online shopping is impacting these stores. I know I don't shop here as much as I used to. Disclosure of the cost of goods sold or cost of revenue made it possible for us to figure out this information. Okay, so let's go back to the multi-step format now. Okay, so we've got sales less cost of goods sold is gross profit, less operating expenses equals income from operations, plus minus other revenue expense gives us net income. The operating expenses are also divided up into two major categories: selling expenses and administrative expenses. Selling expenses vary a bit with sales, not like directly like variable cost does, but generally. Administrative expenses should be flat from year to year, and these include rent, office salaries, and insurance. So make sure to practice this statement without looking at your notes or the text. I wouldn't memorize it, but just have it make sense to you. Better yet, go to Yahoo Finance and look up CVS and Walgreens financial statements. What percentage of total sales is administrative expenses for both companies? One of these companies is much more efficient than the other. Okay.